Hey everyone, thanks for stopping by and checking out my video today. I'll be talking about credit card hacking and how that can help you pay off your credit card debt more quickly. And just before we jump into the video, I want to say if you like the video, if you enjoy the content, please make sure to like and subscribe as it greatly helps to build out the channel and keep providing great content for you guys. So let's start with what is credit card hacking, okay? So credit card hacking in most basic terms is a 0% interest balance transfer on your credit cards. So let's say you have $12,000 in credit card debt, it's spread out across 5 credit cards. You'll open up a new credit card, you'll look for an offer that provides 0% interest for 12 to 18 months. Those are the most two I've commonly seen. And then just make sure you review the other terms as well, as you will be opening up new debt or a new credit card, the inquiry, and the terms of the credit card. I am not going to go into the credit portion and how it may affect your credit, but you will be opening a new credit card. You will catch the inquiry, new trade lines, etc. Right? So now, with that new credit card opened, let's just say you get 0% interest for 18 months. And what you'll do is you'll balance transfer all of your credit cards and all of your credit card debt over into this new card. There's typically a fee with these. The most common I've seen are 3% and or $250, whichever is higher, or $250 and 5%, whatever is higher. It's going to be in your offer, so make sure you pay attention to the card that you're considering opening and doing this balance transfer on, and because that's going to have all the details that you need to know about. Then what you do is you take all that balance and again you transfer them over to that credit card. There'll be whatever fee that's associated with that. And then what that allows you to do is that allows you to make all of your payments that you make to your credit card to be principal payments, meaning that they're going to go directly to the balance of your credit card instead of being going towards interest. And the reason this is so impactful, because think of a credit card this way. Let's say you have a credit card with $8,000 on a balance. Your payment is $250 a month and your interest rate is X amount, okay, whatever it is. You might be making a $250 monthly payment, but $80 or $90 of that might be going interest. So that means that out of your $250 payment, only $160, $170 of that might be going to the actual principal payment, and that $80 is going to the bank. So let's take that out of the equation. Let's say you're going straight to principal. That means all $250 are going to your credit card. Now, $80 times 12 months is $960. That means over the course of 12 months, you're going to be putting an extra $960 onto your credit card balance to pay it down more quickly than if you were paying interest on it. So you can see how if your balances go up and your payments are higher on your original credit card, that can be more beneficial to you. Now, what I did when I did my transfer back in the day is I paid my upfront fee for doing the balance transfers. Can't remember exactly what it is. I think it was 5% of the balance. And as soon as I was able to, I just paid that in full. I just made that payment up front. So that way, my next regular scheduled monthly payment was going directly to just a credit card debt. And I kind of just took that upfront fee as like a one-time fee for doing the balance transfer. And then I just started making my regular payments. And then what I even helped me do is it helped me get in that mindset of I'm paying this down. I can see the balance going down quicker. I can see it going down, more because there's no interest involved. And I actually started putting more of my monthly income into my credit card debt to help pay it down even faster because I could see those gains. I could see the impact that it was having on my credit card. Now, one of the most important parts probably about this process is your mind. You have to have your mindset right so you don't fall back into the same trap. And what I mean by that is you don't want to do the balance transfer, get all of your debt consolidated, start making those principal payments, trying to pay it off before the interest kicks in again. And then, but you see that their payments are going down, your credit card debt is less. Now you start using those old credit cards again, and now you're just building it back up on a different card. And then you'll find yourself paying interest again. Maybe you're doing another balance transfer and paying the fees again. Whatever the case may be, what the ultimate goal of this is to get a term 12 or 18 months, whatever you think you can pay it down, and start making those aggressive monthly payments and try to pay off your debt before the term runs out and pay 0% interest on these credit cards. If you have a great credit card, once that balance is zero, you can keep using that credit card, get the points or the rewards or whatever got you to get that card in the first place, and then now you just have no credit card debt. And that's one of the most powerful situations you can be in, is to have no credit card debt. That just opens so many windows for you. I've been in credit card debt myself. I've made those payments. I know how it can affect your financial health, and I know how long it can take to pay those off. So being debt free is an awesome, awesome feeling. So I'm not going to bore you guys with too many details. I want to just make a short, sweet video for you, give you something to consider, hopefully help you get, hopefully pay off your credit cards a little bit quicker, a little bit less interest, and hopefully just puts you in a better financial situation. So just a quick recap: you find a credit card with a 0% interest balance transfer deal, and if you get approved for it, you balance transfer all your credit cards over. Give the most term they'll give you, whatever the deal is, typically again 12 to 18 months. Try to pay it off in that time, cut the amount of interest you're paying, and put more towards the monthly principal balance. And this is going to help you guys, hopefully, again, pay them off much quicker and get out of the credit card debt trap, as I really like to call it. So one more time, thank you very much, guys. I appreciate you coming in here and checking out the video. I hope you guys have a great rest of your weekend. It's Sunday here, so I'm going to be watching more football. Hopefully my team wins, we'll see. But have a great night, guys, and I'll catch you guys in the next video.